are at the top of the pile. So I'm going to pull the questions up, and the first question is about Black Money 103, and it says, let's see, this is from Philip Wright. Philip says, I noticed the course was recorded in 2019. Is Attorney Compton currently available to submit questions to? Attorney Nicole Compton is one of the co-instructors for Black Money 103, which is our entrepreneurship program. So if you're a person that wants to start a business or anything like that, you can take Black Money 103, and that's a great place for you to start. So the URL, if you want to take a look, is blackmoney103.com. It's called How to Start a Strong Black Business. That's and Attorney Compton is actually going to come back in very, very soon, probably in the next couple of weeks or so. I'm going to text her right now, actually, to find out what day she wants to do her lecture. But she's really good because she lays out, a lot of people have trouble with the administrative aspect of starting a business, meaning, what forms do I fill out and stuff like that. And so she's really good as a lawyer. She's an attorney. And Attorney Nicole Compton, this one, of course I said that. And she breaks it down where you can just sort of have the step-by-step of getting your business going. Because I know a lot of people have good business ideas and they don't know quite what to do next, things like that. And she kind of breaks down and explains every piece of it, the things that people miss, the most common mistakes. And it's good. It's a good program because I know there's one student I'm gonna bring back in. Her name is Susan. And she happens to be a childhood friend of my fiance. And Susan messaged us and said that after she took that class, she started her CMOS business. A lot of times you have these little skills that you don't even know have value. You don't even think about it that way because you're so used to kind of maybe going to work for other people. And she created this little CMOS business and started selling CMOS on her Facebook page. And she's making a killing. I mean, she's killing it. Like literally within the first 6 months, she was tripling her previous income from her job. So now her whole family's working with her to make this homemade CMOS that you can't get this in Walmart. You can't get this anywhere. And that's, to me, that would define what I would call like Black girl magic, in the sense that there are many, many things that we do that nobody else does and nobody else does like us. So a lot of times sort of talking about your business ideas with people who know how to get started can be beneficial in helping you do that. Now, if you want to know how to submit questions in advance, if you log in at the blackstockmarketprogram.com, I sent an email out to you guys today about where to submit the questions in advance. What I'll do is I'll share the link right now. And basically you hit that link, you log in, you hit that link. Only students have access to do this. So this is something we restrict that because I can't answer every single question I get on the internet, but because you guys are enrolled in the Black Business School, you get special access. So let me share that link with you. Give me 1 second here. I'll put it in the chat. All panelists and attendees, give me a second here. There we go. It's right there. So you hit that link and you can submit your question in advance. And that way you can come in and just, ask me any question you want and I'll answer it. And that's it. Yeah. So there you go. The other thing I want to mention too is there's a question about somebody called me yesterday and they said, I got this offer to invest in Bitcoin mining. And I said, really? And this was a surprise because the person that called me is not a technical person. And what I know about Bitcoin mining is that it seems to me that to mine Bitcoin, you need computers, a lot of computers with a lot of processing power. In fact, there are countries that in states that are complaining about all the electricity that's eaten up by the Bitcoin miners, because they're running these computers around the clock. So I was kind of surprised. I said, Bitcoin mining, like, why? How could you, like, I'm not to say that you can't do it, but that's a little surprising to me because I don't see you as a Bitcoin miner. And so what was interesting was she told me that a friend of hers, and she, I ain't gonna lie, she's a little bit like she's from the hood, and her friend's from the hood. And I was like, okay, so your friend is in Bitcoin mining. She said, yeah. And I said, really? So tell me about it. She said, well, she told me that she showed me where she took $1,000 and turned it into $90,000, right? And I was like, that sounds like a prototypical Ponzi pyramid scheme. that's out here. And I talked to her, I said, so tell me more about it. I said, so you're talking about like, well, your friend is getting the computers and you're mining the Bitcoin together. She said, no. I just put money into a group. And in that group, they take all of our money, they pull it together, and they mine Bitcoin with it. And then you get your share of the profits. So I did some research on it this morning because one of you asked me about that today when you sent your questions in for class. And basically, that sounds to me like it's a pyramid scheme. A pyramid scheme is it's very similar to a Ponzi scheme. Bernie Madoff had the most famous Ponzi scheme ever. Bernie Madoff, he died in prison. He was a multi-billionaire, one of the most respected people on Wall Street. And he actually just died in prison after getting, a 150-year sentence or something, which I can imagine that at the age of 70, getting 150 years in prison, you're expected to die in prison at that point. And Bernie Madoff, what he did with the Ponzi scheme was he would, a Ponzi scheme is basically where you take money from your investors, and what you do is you pretend like you're investing in something, right? There was a famous, the black guy, what was his brother's name? Can't remember his name. His name escapes me, but maybe I shouldn't even say his name because I don't want to talk bad about him. But he went to prison on this, where he was going to black churches and he was getting people to invest in his company. And he was, kind of speaking the church talk and everything else about black wealth and everything else. So all these people were giving him lots of money. They would give him their whole retirement savings and everything. And he claimed to be taking the money to invest in real assets. Like he was like, oh, we're going to invest in a liquor store or whatever, right? Maybe it wasn't a liquor store because it was church, but we were investing in a sneaker company and blah, blah, blah. And what happens is that with a Ponzi scheme, what you do is you tell, not what you do, because I don't want anybody, please don't do this. But what a Ponzi scheme operator does is they will tell you what they're investing in, but they're not investing in anything. What they're doing is they're taking money from new investors and they're paying the old investors. And what you're doing at that point is they're taking advantage of the economic benefit of word of mouth. Right. So if you have the first investors that come into the Ponzi scheme, those are the people that actually do okay, because they're coming in, they're putting money in, and then what happens is that the Ponzi scheme operator is paying those people consistent amounts of money, like really high returns on their investment. And everybody's like, oh my God, this is so amazing. I'm making so much money. So what do? When people make money, what do? They tell their friends. Like, think about it. If some of you that made money maybe on Dogecoin or whatever, you're telling your friends, which is making more people want to go buy it, right? Because everybody's always looking for the next hustle, the next opportunity, right? So basically, when you're getting that word of mouth going, they are then able to consistently bring in new money, right? So they're bringing in more and more new people to pay the old people. Right. So the whole time they're pretending like, oh, we're making all this money from investing, when really they're just paying people with money that they've made from the new people that they're bringing in from the marketing. So Ponzi schemes typically break down when there is either a slowdown in the word of mouth marketing, where you can't bring in enough new people to pay the old people, or there's a crash in the market. Like that's when Bernie Madoff, that's when Madoff got busted. And the black guy that I told you about, I can't remember his name. They did a whole, that show, CNBC Greed or whatever. Like they did a whole episode about him. And it was interesting because he was like, I knew somebody who knew him. And at that time, before all that happened, he was known as this young guy who was super smart with money and super, sharp and able to do this and do that. And I don't know if he's a bad person or a good person, but I do know that when he got the money, and this is something that you have to be cautious about, is I do remember he was a little bit on the flashy side, right? And this is where that rap culture kind of messes you up a little bit. People that really are serious about money and all that, they're not really flashy. They're not out here saying like, look at the Mercedes I bought, look at my mansion. Me and my wife are drinking champagne on the beach. Like, maybe you can show that you're living your best life a little bit, maybe having some fun, but you don't want to, but when you get into that kind of glamorous, lifestyle, you're creating this image that people then feel the need to maintain. So I remember he was a young guy in his 20s, which is a time where people are heavily influenced by hip hop culture. Like, I'm old. I know I'm uncool. I don't even try to be cool. I gave up on that when I was like, 17. And but he was trying to be cool, and his wife did like this music video because she wanted to be, this glamorous, famous singer and a celebrity, right? And it just kind of came back on him because they used all that against him when they were trying to basically, finger him out to be a scammer, right? And what was his name? I wish I could find his name. It was on American Greed. Somebody remember his name? I don't remember the brother's name, but it was a black guy because he was in Bishop Eddie Long's church, and a lot of his parishioners in the church were mad at him. And the thing about it was, what busted him was when when the market crashed. Because what happens is when the market crashes, people tend to go in, and that's when they start cashing their money. They start getting scared and nervous, and it's like a run on a bank. Right. And a run on a bank is a very, very scary thing for the bank, because most banks don't even have your money. So when everybody shows up and comes to get their money, then the bank is like, we can only pay, 5% of you. Same thing is true with insurance companies. Ephraim Taylor, that's his name. Yeah. And I'm just telling you, I'm not into like necessarily just like saying, oh, he's so terrible, he's so bad. I feel like, honestly, I felt like Ephraim was a young guy who got a little carried away. That's what I really felt. That's what I saw, because I watched it all kind of go down. And I said, my God, I feel so bad for his victims, of course. And then just, because I remember seeing that. I remember seeing the flashiness and everything. And I said, I think that's going to come back and get you. And they did. They used that against him on the Greed show, right? So when you start making money, be careful about really flaunting what you have, because it creates a bad energy around you where people then begin to wait for you to fail. Okay. And then the other thing is, so Ponzi schemes are similar to pyramid schemes. They're not the same. A pyramid scheme is basically those situations where they're asking you to recruit new people. I can just tell you that, first of all, they're illegal. Anything that where they're telling you, okay, you put in $200 and you're going to get 3,000. That right there should be enough for you to for the alarm bells to go off. Where it's something that's too good to be true. And usually when something's too good to be true, it probably is. So the logical question to ask yourself is, okay, if there's 5 of us and I put in 200 and everybody else puts in 200, how does that 200 turn into 5,000 or 3,000 or whatever, right? That don't make sense. That, this ain't Jesus, like where he took one piece of bread and fed 100 people or something, right? Like there are no financial Jesuses out here. That money has to come from somewhere. Like in economics, we use that term. There's no such thing as a free lunch. So basically the question you must ask yourself in a situation like that is, okay, if I'm putting in 200 and I'm getting back 3,000, where's the money coming from? Oh, the money must be coming from new people, right? New people coming in, right? So at some point, somebody's not going to get paid. There's no way that we could recruit enough new people where we're constantly paying everybody, 6 times their investment, right? So these blessing looms, it's definitely a type of gambling, right? And the thing is, remember, gambling is not, I don't think gambling's a bad thing as long as you know what it is, right? It's just like, is it bad for somebody to have a one-night stand? No, as long as you know what it is. Like if you think that's going to be your husband or your wife, then you're going to be disappointed. But so there's a difference between a spouse and a one-night stand, just like there's a difference between gambling and a long-term investment. So the pyramid schemes, Ponzi schemes, the Bitcoin mining, I'm going to say Bitcoin mining scams, if you will, you got to be careful with those, because apparently a lot of people are pushing that out there. And the more crypto grows in popularity, the more these things sort of pop up. And the Bitcoin mining scam apparently just appears to be one where they, real simple, put in $200, you'll get, 3,000. And this is what we're going to, and they're really good. They're really good salespeople. They'll have some video where they'll explain to you how everybody makes money. And the thing is, everybody ain't going to make money. But here's the interesting thing about it. This is what makes it controversial, is that somebody does, some people do make money, right? With most Ponzi pyramid schemes, the people that get in first, a lot of times will make money at the expense of the people who get in last. So when Bernie Madoff went down for his Ponzi thing, they went back and sued all the people who got paid early, and said, look, that's not your money. We have victims over here who put in money, and they took their money and gave it to you. So you got to give those people reparations, basically. So I'm not telling you what to do. I'm just saying, make sure you just at least know what it is. And so, and maybe because the thing is, I'm gonna tell you the truth. I know people who've gotten involved in like the blessing looms and all that. And I don't think that not all of them feel like they're exploited, right? Not all of them are saying, "Oh my God, I lost all my money." But I do know a lot more people who say I jumped in and I didn't make any money. Even MLMs are right on that line. Most MLMs are right on that line between legal businesses and pyramid schemes. And what defines that line is that MLMs typically they will offer a product or some sort of investment to kind of justify what they're doing, but they're kind of operating in the same capacity where the only way you're able to make money is you must recruit new people. So if you bring in new people and you're okay asking your friends to be a part of this, knowing that some of your friends might not make money, then it's up to you. But I know that when I hear people recruiting me for things like that, I run away. I don't even want to hear the conversation because I know you're going to be compelling. I know you're going to present something that sounds interesting, but I don't want to hear it. And I get pitched these things all the time because I have a big following. So I could get on here and say, "Hey, everybody invest in this," and whatever, and people will do it. But I don't touch that stuff, right? So I would encourage you just to be thoughtful about it. I'm not here to tell you what to do. I just want you to have the tools to make your own choices. Okay. All right. So let's see. So the next question I got. What's the next question here? Hold on. Let's see here. Let me pull up. I got all these screens open now. Okay. So the next question that I received from you guys was from Nicole. Nicole says, "How do I buy my first stock?" Very straightforward. You can go to Cash App, Robinhood, Acorn, Stash, any of these apps, and I would encourage you to consider something safe and diversified, like the S&P 500 Spider, which gives you a piece of every stock in the S&P 500. You can go to firstshareofstock.com. That's firstshareofstock.com. There's actually a tutorial I put together on how to buy your first share of stock. So it's literally called firstshareofstock.com. Let's see. Robin says, Robin, that's my mother's name. Okay. Thanks for all you do. I did like you and took some play money and bought Dogecoin at 4 cents. It went up to 40 cents. Waited until it went down again and bought at 17 cents. When would you suggest I take my profit? Well, Dogecoin is a great topic of conversation lately because Dogecoin is just killing it. I mean, so much money is being made. You guys may or may not have followed this, but I'm doing a Dogecoin experiment. I went on my Twitter. My Twitter is Dr. Boyce Watkins 1, and I took a vote and I said, how many of you would like to see me buy some Dogecoin just to tell you what happened, right? So I was like, and so a lot of you said, yeah, we'd like to see that. So I said, okay, let's do it. So I bought 5,000 Dogecoins, which cost about $1,800. I bought it 39 cents per coin. And then the price started dropping. And I just decided to just hold it. And then the price started going up and up and up. Then it went past 41 cents. And then I took another vote. I said, what do you want me to do now? Do you want me to sell, hold, or buy? And the majority of you actually said hold. And I said, actually, I'm going to go against your vote right now because I feel like, with something like a Dogecoin, you're really trading more so based on your expectations of social reactions, right? So I said, okay, Elon Musk is going on SNL this week. It's going to be a big deal. It's very controversial. He's going to be in the media a lot, and which means Dogecoin will be in the media a lot. And they're probably going to do some Dogecoin skits. Like I think he named himself the Doge Father. So that's going to come up, I'm sure in some SNL skit, and that's going to make people buy more of it. And also eTron, or is it eToro, this cryptocurrency exchange, they're trading Dogecoin. Mark Cuban is jumping in and telling people that Dogecoin is great. So I said, okay, I think this is going to push the price up because it's going to push demand up. And I'll be damned if the price isn't up to like 54 cents a coin now. So literally we just, it's basically what you might call a momentum trade. I'm just literally saying, I think the momentum is positive. And remember, a lot of times what people pay for something doesn't come down to what the value is really worth. A lot of people don't care about the difference in price between something that is 30 cents versus 60 cents, right? Because you waste 60 cents all the time. Many of you, like, think about it. If you grew up like me and you didn't invest at all, you probably spent hundreds of thousands of dollars that you never got anything back for, right? Because many of us grew up, thinking that when you get money, you spend it. There's that song. Anybody remember that song? I'm riding around and I'm getting it. I'm riding around and I'm getting it. I'm riding around and I'm getting it. It's mine. I spend it. It's mine. I spend it. So that's basically saying every time I get money, I just give it away, right? Every time I get money, I put it into assets that give me nothing back. Right? Forget, losing money, right? It's one thing if you put money into a stock or whatever, and the price drops from, you put in $100, the price drops from 100 to 80. You're like, dang, I lost $80. Yeah, well, you probably went out and bought a pair of shoes for $100, and those shoes you bought in 2014, what are those worth now? Can you sell those shoes to anybody? No, you can't sell them. Ain't nobody gonna buy those old raggedy things, right? Do you still wear them? You probably don't even wear them. Like, people don't. You ain't wear an eight-year-old pair of shoes. So those shoes literally dropped from 100 to zero. 100 to zero. So imagine putting your money into a stock, and imagine if the price went from 100 to zero. So at least if you put your money, and this is why they talk about investments as a store of value, right? You're putting your money there, and at least you can go back and get that 80 back, right? What I want you to understand, I want you to appreciate, let's suck it in and reflect for a moment on the blessing that you actually have well-functioning financial markets. The idea that you can go put your money somewhere and go back and possibly get more money than you put in is awesome. The fact that you can get something back, right? The fact that you can sell what you bought and have a ready buyer that will give you money for that thing right away, that's pretty cool. Think about this, process this for a moment. This is something that I had to be a 45-year-old man with a PhD in order, and I've had my PhD over 20 years. So, and I was pretty smart when I got my PhD, but I know a whole lot more than I knew back then. But check this out, right? A lot of us go start businesses. A lot of you want to be business owners, and you're training your kids to be business owners, which is exactly what you should be doing. That's what all black people need to know something about starting businesses and investing. Like, that just needs to be the cool. They need to literally be like, if you ain't investing, then you ain't black, right? Seriously, like Joe Biden said about voting Democrat. No. If you're not investing, then you ain't black, as far as I'm concerned, because we're builders, we're winners, we're going to succeed. So here's the thing. A lot of us are starting businesses, right? So imagine you start a business, I don't know, a bakery or something, right? So you're putting everything into this business, right? First of all, you're giving 80 hours a week of labor to this business. So let's say your labor is worth $50 an hour. So you're giving $4,000 a week to this business just from your labor alone. And then that doesn't count the fact that maybe you're putting in all your extra money into this business, right? So let's say you're putting in $4,000 worth of labor and another $2,000 worth of cash in this business. So you're putting $6,000 a week. You're dumping. Pay attention now. Follow this logic. This is an epiphany for me, man. I swear. You're putting $6,000 a week into this business. You do that over the course of a year. Let's say you work 50 hours a week. You give yourself 2 weeks of vacation. 6,000 times 50 is what? Is that 30,000 or not 30,000? Right? Is that right? No, that's not right. I'm doing the math wrong. Dang it, boys. Is that 30,000? Right? No, 300,000. Duh. Right? Yeah, I'm trying to do the math. Sorry, y'all gotta forgive me. I'm a little slow today. All right, yeah, there we go. 300,000, right? Yeah, that's okay. There we go. All right, so you're putting $6,000 a week for 50 hours a week. So you end up spending $300,000 a year that you're putting into this business. You follow me? Give me a yes in the chat if you're following my logic here. So you do that, and let's say you start making money, right? So you're making back, but let's say it takes you a couple of years to really become truly profitable. But most of the time, a lot of time, you're keeping your head above water. So you're breaking even at least, but you're doing what you love, which is cool, right? So it's better than being on the plantation, but you're not quite where you want to be economically. A lot of us are in that struggle stage. Like, a lot of you have businesses where you're not, you see where you're going, but you're not there yet. You're trying to get to that next level. I get that. I spent a lot of years trying to get to the next level. So $300,000 a year. So let's say you grind along for 3 years or a little over 3 years. You put $1 million into that business, $1 million into that company, right? And let's say you make back, I don't know, 700,000 of that $1 million, right? So you're $300,000 in the hole, but you put $1 million into this business. So that's $1 million company, technically speaking, right? Based on what you've poured into this thing. Can you go to the market and sell that business for $1 million? Like, can you go and, you say, hey, I spent 3 years. I gave my blood, sweat, and tears, all my extra money. I built this business. It's now got customers. We're now making revenue. It's not insanely profitable, but it's doing okay. Like we're eking out a profit of maybe, $30,000 a month or something like that. Can you go? Is it easy for you to go to the market and sell that business? No, it's hard. It's hard as hell. Most of you that have businesses probably couldn't sell the business if you wanted to sell it, and you certainly couldn't sell it in a short period of time. Like maybe if you got lawyers and business, accountants that can prepare your business for sale, and then you go on the market and you're looking around for the right buyer, maybe that happens. But most Black businesses I know can't be sold to hardly anybody. There's not, and the reason they can't be sold is because you don't have a liquid market for your business. And that's the beauty of the financial markets. The financial markets have something called market efficiency, which means that there are thousands of businesses on these exchanges that can be sold very quickly, right? And they chop the value up into little pieces, and you can buy little shares, and your business can be sold to 3,000 shareholders in literally a matter of minutes. In minutes, right? So if I've taken that same $1 million that I put into that business, and I'm exaggerating because we're talking about not just financial capital, you're also putting in what they call human capital, your labor, right? So if you put that same $1 million or even half of that into a bunch of stock, let's say you said, instead of doing all this labor and grinding away at this business, I'm going to put $500,000 into Amazon stock. And your Amazon stock value goes up, from 500,000 to 1.2 million. You then have not only something where to process this, you've made more money than you put in, right? Because your 500K is now worth 1.2 million because you're investing consistently. Two, you have a liquid market where you can go right now and get that money back anytime you want and turn it into cash and do whatever you want with that. Three, this is a real big one. People don't pay attention to this. You didn't have to do any work. So that whole 3 years that you spent away from your kids, away from your wife, away from your friends, like literally single-minded, grinding, like stressing yourself out and pulling your hair out, all that goes away. Like you didn't have to do any of that because the people at Amazon did all the work. All you did was you bought into the company. You're a passive investor. So basically what I want you to I want you to add this tool to your arsenal, that actually when you dig into investing, you dig into business ownership, sometimes being a passive investor is better than being active. Like that's the transition I eventually made. I do this business now that I have with Boyce Watkins Enterprises, where we create, various things, content, movies, and whatever, the Black Business School. I do this as a labor of love. I do it because it's like, yeah, I really love talking to Black people. I have people that work for me and I can give them jobs, and we support schools, and we created a foundation, Alicia and I, and so that's what I love to do. But in most areas of business that I invest in, I don't want to do any work. I'm like, no, I don't want any more stress. I don't want any more things on my to-do list. I don't want to spend any more time away from my kids. I'm going to put some money into that company, and I'm going to let that company just grow. Right? Or I'm going to sell the stock options every week and get my piece, get my money in my account, and do that with no work at all. So I want you to just kind of understand that's that next level of wealth building, where you get to the point where you are positioned to earn that truly passive income. Truly passive means, or like you think about real estate, right? A lot of people talk about, like, there's a big trend right now, which is very, very good, very important, of people buying property and renting the property out. And I'm a big fan of that. Julian Gordon, who's our dean of real estate in the Black Business School, does a great job with the Black Real Estate Group and everything else. And they're buying up big chunks of Baton Rouge, Louisiana right now, in case you don't know. And it's great, right? But I remember sitting there and I just told Julian one day, I said, man, I love what you do, man. I think you're so good at it. I said, but I don't think I want to be a landlord. Like, I don't really want to, I don't want to have to go and evict, some single mom who didn't pay her rent for the last 6 months, right? I have to evict her, or we're going to go, we can't pay our mortgage, right? I don't want to fix people's toilets in the middle of the night. I don't want to get sued because somebody slipped and fell on the floor. And like I have too much common sense, I think, sometimes, where I'm like, if you slipped on the floor, why do I got to pay because you slipped on the floor? Like, I didn't do anything to the floor. Like seriously, like stuff like that doesn't make sense to me. Or how somebody can come visit your house, and if they get hurt in your house because they're stupid, you got to pay money. Like that makes zero sense to me. So my thought is like, if I invest in real estate, no, you know what I do? I do have property, and I have a property management company that manages all of that. So I don't have to even find the tenant. I don't worry about collecting the rent. I do nothing. All I do is I sit back and we collect the money. I invest in real estate investment trusts. Like, imagine if you find the right REIT, you find the right real estate investment trust, and let's say that it grows by 20% a year. Well, then you're making a really solid amount of income and capital gains growth just by being one of the investors. Like with real estate investment trusts, a lot of them have rules where they have to distribute a very large percentage of that money to all the people that invest, which is not much different from you actually buying the property and owning it yourself, right? So there's a lot of ways to skin that economic cat. And I don't want you to get too caught up in just sort of that one way where, because Black folks work hard. Like, we work real hard. We're the only group of people in America that have been working for free for hundreds of years. Like, nobody else can say that. Like, everybody else can say, oh, well, we built America. No, you didn't. And whatever little piece you built, you got paid for that. We not only built America, but we built it without compensation. So we are the hardest working people in this country when we're on our game. And so working hard for others obviously is not as good as working hard for yourself. But the next step to working hard for yourself is to get in a position where you can create wealth and value without necessarily having to sacrifice 100,000 hours of your life on this earth. If you add up the number of hours you spend working for a corporation, you get about 100,000 hours, like 40 hours a week over a 50-week year. That's 2,000 hours a year times 10 over a decade. That's 20,000 hours a decade. If you work over, say, a 50-year period, which most Black people do, if you live that long, then you're talking about 100,000 hours of your life that you gave away. So the best part of being a business owner and a wealth builder when I made that transition was not really the money. The money came, the money was fine, but it was really, but actually when I got more money, I realized money wasn't that important to me, because eventually you're like, well, there's not much more stuff you can buy. Like, okay, I got the car I want, I got the clothes I want, I got the house I want. Like, what else is there, right? So the money is not really the kicker. The kicker is getting that 100,000 hours of life back that allows you to spend more time with your family, more time. You could talk to your parents that much more before they die. You can spend more time with your kids. You can spend more time just finding your bliss. And if you go back to the fundamental of life, you know me, that's how I teach. I kind of teach in a philosophical way sometimes. I hope this doesn't go too far over anybody's head, but I think about when they talk about the inalienable rights of a human being, life, liberty, and the pursuit of happiness. So to me, I'm like, okay, I want life, I'm alive, that's good. Liberty, I want freedom to do whatever I want. A lot of our freedom is taken away early when they tell you that you have to go work on the corporate plantation. So that freedom is gone for most people. Most people don't have the freedom to do what they want on a daily basis. And then the pursuit of happiness. I was like, what does that mean? Well, in pursuing something, pursuit of happiness. So happiness is an object, like it's over there and I got to go pursue it. Well, in order for me to pursue something, I have to know where it is, right? So that's knowledge of self, figuring out what's going to make me happy anyway. A lot of people don't even know what's going to make them happy. They take in media and they see what they think makes other people happy, right? Or, like, oh, I'll be happy if I'm famous. I'll be happy if I have $1 million in the bank. And then that's why you have a lot of very wealthy celebrities that are really, really depressed. You have children of billionaires that are suicidal, right? How could you be suicidal if you're a billionaire? Well, because you thought money was going to be the key to happiness, and money is not the key to happiness. Money is a tool on the pathway to happiness. So first of all, I got to find out what's going to make me happy. And then two, I got to pursue it, right? Which means that I have to have the knowledge of where it is and the time and ability to go pursue the thing that's going to make me happy. So if I say, oh, I figured out where happiness is for me. Happiness is 2 miles down the road over in the other neighborhood. And now I'm going to go pursue it. Well, I can't pursue it if somebody says, no, you can't go pursue happiness because you got to stay here and work. Right? You got to come to the factory. So the factory is that way. Happiness is that way. I got to go that way because I don't have freedom. Right? So ultimately getting that freedom and the ability to pursue your happiness is literally the thing that is the holy grail. I think that's the thing where you reach something that's more important than wealth actually in economics. And it's called utility. Utility is basically how freaking happy are you about your life, right? Wealth is a component of utility, but it is not the defining factor. So don't think that wealth is the be all end all. When you see all the flashiness and all that, I'm not saying don't go get it. You see the people with the private jets and the fancy cars and everything else. That's cool. Go get some of that if that's something you enjoy, but don't feel bad if you're in the category where those are things that don't matter as much to you, because I'm in the same category with you. I can buy a lot of stuff that I want if I want it. I just don't want it. I realize, like, why do I want that car? I don't even drive anywhere, and I don't really. Who cares about impressing people in a stupid car? I don't even, like I don't. It doesn't give you that feeling like you're like, oh, I want something that's going to give me that high of happiness. And a lot of these material things don't do it. That's why when Deion Sanders was at the peak of his career, making millions of dollars a year, had every girl he wanted, could buy any house he wanted, any car he wanted, he was suicidal, right? And it's because he hadn't found the passion. He hadn't found the reason for existence, his purpose, right? And that's when he became a pastor, and he's doing all these other things. And that's really the journey that I think a lot of people go through. It's an evolutionary process. But what happens also too, this is true in economic theory, is that and as well as things like health, et cetera, is you tend to crave the thing that you don't have, right? So when you wake up and you say, gosh, I really want to eat a steak today, it's because your body is craving nutrients that you will find in steak, right? If you'd eaten steak yesterday, you wouldn't be craving steak, but you're craving it today, maybe because your body needs protein or whatever it is, right? So a lot of times, if you grow up without money, you're craving money, right? You're like, oh, money over everything, money, money over this, money over that. I'm going after the money, right? Then you get the money and you're like, okay, now I got enough money. Like what matters now? So the biggest dilemma that I had anyway, in terms of thinking about my relationship with money, was when I had enough money, and I was like, God, now my sense of purpose is gone. I spent my whole life getting up and going to work. Think about this. Think about how many of us grew up where every day you got up and everything you did was driven by the money. You took the job that paid the most money. You got up and you went to work every day because of money. You were thinking about money constantly, right? You will move your whole family across the country because of money. And then what if you get to the point where you don't have enough, where you have all the money you need? Well, then you got to find a new reason to even get out of bed. That was the thing. I was like, I told Alicia, I said, I don't even know if I want to get out of bed right now because I don't really care about trying to make more money. Like, I want to lay in the bed and watch Netflix all day. I can't do that until I grow old, right? So when you talk about picking a career for your kids, you may want to ask them this question. You may want to start, because again, a lot of you are investing for your kids. Like, if you do things like the $5 a day investing program at theallblackagenda.com, theallblackagenda.com, that's where you can find it. I'll say it one more time, theallblackagenda.com. If you go do something like the $5 a day investing plan, what's going to happen is your kids are going to have a different life from you. They're going to have a different set of dilemmas from you. You're going to have a nest egg for them. They're going to have plenty of money, and they're going to have financial literacy. Working for other people will be an optional for them, right? So then you have to say to them, okay, when you pick your career, and don't just say doctor, lawyer, or engineer, right? Those are the top three I've noticed that ambitious young Black people tend to pick. What career would you do if you were getting paid nothing, right? If all the jobs paid exactly the same, if the lawyer made as much as the social worker, if the doctor made as much as the plumber, which career would you pick then? And I bet you that a lot of their answers will change if you change the money. A lot of people will go to medical school. Pay attention now, listen to this. A lot of people will go to medical school for a decade, mainly so they can make a doctor's salary. Right. So if you and what is a doctor's salary? Doctors make between maybe $300,000 up to maybe closer to $1 million. Right. So lower paid doctors might make $250,000. The surgeons and whatnot might make $700,000-800,000. I know people who make more than a doctor's salary and don't even work, who have high school diplomas, who literally just got it because they became investors and they own assets and they're able to move their assets around and make that money. So there's a lot of ways to skin the economic cat. And then once you skin the economic cat, you have to deal with the higher level issues. They go beyond just the money. Okay. So anyway, I hope that part of the conversation was helpful. I know that sometimes I'll pick a topic and I'll kind of drill into it. But it's something that's just important. I want to make sure you understand that because these things really matter. At the end of the day, I want you to be happy. More than I want you to make money. I want you to make money. Absolutely. But I really want you to make sure money gives you what you want. Okay. So Akila says there's a person named Edward Bickle that continues to be referred to about crypto on the Black Financial Channel. I don't know who Edward Bickle is. Oh, you know what? That's probably a bot. So I want to let everybody know, if you ever see messages on my platform where I'm pushing someone's name in the chat, it's me or someone else, just know it's not me. Like, I'm not the person that's going to send you an inbox saying, hey, you want to invest in this crypto thing? Because that's what happens when you get a bigger platform, the bots, and you don't just have the bots, right? On my Instagram, sometimes the bots are in there and we're trying to get rid of them. It's so hard. But also sometimes they'll just pretend to be you. So there are a lot of people that I guess there are people, I don't know if they're in China or what, but I guess they peeped out maybe the influence that I have as a financial guy, and they go in and they will send personal messages to people with accounts that appear to be me, and they'll have a conversation with the person and get them to put money into something. So don't do that. Please do not do that. I encourage you to pay attention to things that where you're looking at me and it's coming right out of my mouth, or if you get an email from me, that's legit. But stuff in the comments and all that's usually not me. If I come in the comments, it'll be something like, hey, everybody, what's going on? Like, that's the kind of stuff I do. All right. So let's see. Lolita says, I just signed up for the class on Friday. I'm thrilled to be here. I haven't had a chance to go through the material, but as a newbie, are there instructions outside of what's in this course? Yeah, well, in the Black Stock Market Program, you can log in at the blackstockmarketprogram.com. What you basically have access to that gives you a huge advantage is, one, obviously there's just a ton of curricula. There's so much stuff in there, it's ridiculous, because I've literally been compiling lectures for 5 years. So there's a lot of stuff. The biggest problem we have is that there's so much stuff that people feel like they have to go through everything. You probably can't get through everything, but going through and watching maybe 3 or 4 hours of this stuff is going to put you ahead of the curve economically, because this is what I know. And the other piece is you also have access to what Dr. Boyce is buying. So if you're trying to figure out what to buy and you think that I can give you guidance in that area, I deliberately specifically tell you what I'm buying myself right now. Right. So basically, each week I put something out and I just say, okay, I'm buying this and this is why, et cetera. And I talk about, things like options plays, like how to sell the stock options and which stocks to pick to sell stock options on, because that's actually the one angle of investing that people don't talk as much about, which is the ability to generate income from your portfolio that's consistent, that's higher than a dividend. Right. So I have a process for that. Every stock, every company has stock options that are out there, and every buyer must have a seller. It's like parents, with children. Every child has to have a mommy and a daddy. So every asset that's on the market has to have a buyer and have a seller, right? That they make the deal. That's where the price comes from. So the price is like it's literally a baby being born that comes out of an interaction between the mommy and the daddy. The seller and the buyer get together, make a deal, and then a price comes out of that, and that becomes the market price. So basically, when you see the options market, and a lot of people know how to buy options, because it allows for speculation. It allows you to own a piece of something that will go up with the stock price going up, right? It's what they call a correlated asset, right? And so this correlated asset, or this derivative asset, where the value of that asset derives from movements in the value of the company, that allows people a cheap way to kind of get in the game. But the thing about options, the downside of options, is that it creates a gambling culture. A lot of the people that go on Robinhood apps, the new traders, the Reddit investors, et cetera, they're heavily investing in options to the point where they're losing a lot of money. And I don't believe in doing that. But what people forget is that every financial transaction has a yin and a yang. So when one person makes money, somebody's losing money. When somebody loses money, somebody's making money. So when people are going heavy into options and bidding up the price of these options to insane levels, somebody's selling those things to them, right? I'm a seller. I don't buy options that often. I sell them. Right. And that allows me to generate monthly income. And basically what I'm doing is I'm allowing people to gamble with my stock. I'm like, okay, well, I got my stock. It's worth $100. I just want to get my ROI. So you give me $5 per share. I'll let you have the upside on my stock, but I get my $5 no matter what. So if the stock price goes down, you lose. I already won. I won because my money is in my account and I'm good. So, so that's another way to kind of look at investing. So don't forget that options can allow you to have access to risk or access to growth, but it can also allow you to put risk out, to sell the risk to someone else that wants to take that on. So it's a little bit like a casino. You got the gamblers and then you got the house. I like to be the house. That's more consistent for me in my view. But then again, I'm a 50-year-old man who's got a family, so I'm more interested in the income than I am in the speculation. All right. So so log in at the blackstockmarketprogram.com, and that's where you can get access to all the stuff. And also you get access, you can send your questions in advance. I encourage you to do that because those are the questions I answer first. And also you get access to Ask Dr. Boyce, which is literally an archive of all the questions I've answered, literally going all the way back to, I think, 2015 or something like that. All right. So let me dig in